Okay, welcome. Thank you for joining. This webinar is part of a series offered by Miria Systems regarding business process automation solutions. Today's webinar is entitled Accounts Payable Start to Finish, and I want to thank everyone for joining you. I'm the host today for the presentation. I will actually be handling most of the discussion today. I'm the managing partner here at Miria Systems, and if during the webinar you have any technical problems or you have any questions to ask the panelists, please send an email to amcatier@miriasystems.com. That email address is on the slide in front of you right now, so if you'll take 1 second to write that down in case you have questions. At the end of the session, we will try to take a moment, time allowing, to be able to address some of those questions. Okay, so let's get started. Our objective today is we're going to take a high level at each step in the AP process and identify best practices and metrics, including capturing data, workflow and processing, integrations, reporting and metrics, and supplier interaction. Now, this is directly from the invitations that you all received that you signed up from. Hopefully, everybody will get something out of this. Now, when I do say high level, I do mean high level. Obviously, every step in the process can be quite daunting, and it's hard to go through all that in an hour. Our job today is to help make you think about your own process, perhaps ask some questions or start the generation of questions that will help you to improve your process. The agenda we're going to walk through is I am going to give you a couple slides on who is Miria and why we think we're qualified to have this discussion. We're going to talk for a couple minutes about what the analysts say about this process. We're going to go into what Miria calls the 5 separate categories of the process itself. We're going to discuss key metrics for how you measure it, and I will tell you that won't be all inclusive. We're really just touching on some metrics that we think perhaps are most valid or the most important to most companies right now. We're going to talk about best practices by category, and then as I said, we'll have some time at the end for questions and answers. So with that, we're going to get started right away. So who is Miria? First of all, Miria has been around for 25 years. We have a lot of experience in terms of business process automation and what we call content enablement. We're a small company, but we're also very agile and very customer-focused. We're focused on today the commitment to efficient business process automation for our clients, and we help our customers with the delivery of software solutions both on-premise or in the cloud. And we are a very significant IBM Premier Business Partner, and IBM technologies are core to a lot of what we do, including the IBM ECM or Content Management Suite and DataCap. One of the core values of our company is helping our customers to accelerate their time to value, meaning gone are the days of the 2-year IT project where it took you a year to get capital approval and a year to implement it, and if everything went well at the beginning of the 3rd year, you were starting to use it. In most of our discussions today with customers, they may have some type of an initiative that needs to be up and running in anywhere from 5 weeks to 12 weeks, and we pride ourselves on having the skill and the knowledge to help our customers achieve that. We do have our own products. We will not be talking about products specifically today, but Miria's products cover the area of financial management, which accounts payable management is part of, payroll and human resources management, what we call the retail collaboration portal, and also supplier portal. We will be talking about business value and some of the functions that relate to these products, but we're not going to talk today about products specifically. Some of our customers that we are working with and we've worked with over the years include customers in various industries, financial, retail, and consumer packaged goods, which is the second section there. Healthcare and manufacturing are part of our expertise and skills, and then manufacturing and industry. All of these different customers give us different templates and experience points where we can bring subject matter expertise to implementation of your solutions and systems and help bring best practices that are utilized at other companies. So in the second segment, that's really the overall commercial, if you will, about who Miria is, and if you have other questions, remember that email address. Please send an email through, and we'll try to address it. So we're going to jump right into the next section about what do the analysts say. And there are a lot of analysts in this space that are constantly looking at accounts payable automation. There are a lot of different questions that may come up, but what everybody does agree in is that business is accelerating, and the job of the back office and the different departments is to keep up. No, you can't hire anyone is usually the answer today. So if you can't hire anyone, well, how are you going to improve what you're doing or improve your efficiency? And really, business process automation is a great answer for that. And the thing that we have to understand, all of us have to understand, is if we think it's moving fast now, you know, the truth is just wait a couple weeks because it's going to continue to get faster. So if you're looking at this thing saying, well, it's really not the right time for us to address this, you really need to reverse that and say to yourself, this is really the only time or the best time to address the opportunity for business process automation. Now, what does this really all mean? You know, this is a slide that's been used before from Gartner, but it talks about what CIOs help companies or what they're looking for and what their priorities are. In most companies today, they're looking to reduce cost. How do you automate manual processing? How do you reduce complexity? Reduce the cost of change in the organization? Errors and exceptions are a huge liability for most companies. And how do you minimize the cost of legal and regulatory compliance? But there's also need for flexibility. I mean, it's easy to address compliance by putting rules down and saying, hey, you just can't do this. But the conflict is a lot of times you need to be flexible. You need to be able to work with multiple or global vendors, and that in itself creates more pain back on the accounts payable department for the payment and the management of contracts. We have to be able to implement change faster. We have to be able to react quickly to opportunities and to threats. And we need to reduce the risk and the response. There's not a day goes by that Congress or somebody isn't talking about changes in regulatory environment, whether it's Sarbanes-Oxley and corporate accountability or it's regulatory around sustainability and environmental issues. There's green initiatives in every company we go to talk to today, which impacts their utility bills, and utility bills, a lot of times that becomes an accounts payable challenge in the process. So all of these different things are factors in this changing world today. And we're not going to touch on all those today, but we're going to talk again about best practices and how you address some of them. So when we talk about accounts payable, I like to start off with what are the basic industry metrics. Now this chart is sourced from many different groups, and you know, Arden Partners, Aberdeen Group, Paystream as advisors all have their own analysis around this. But when it comes down to the cost per invoice to manage this process, a company average that's widely used is around $20, in this case $19. The number of invoices per processor might be 1,500, and I know some of you are saying, well, hey, we're twice that already. That's good. Time cycles to receive, approve, and schedule, 10 days. Percentage of invoices received via paper, maybe 80%. That's a pretty high number, I think, from most customers we talk to today. Processing error rates, you know, as high as 6%, and invoices received with errors 14%. But the real point here is what is best in class? What are you capable of achieving if you address automation either in whole or in part in your organization? And it's proven that companies can reduce their costs, you know, from that $19 down to less than $2 per invoice. You can reduce your cycle times for approvals down from 10 days to 3 days. You can reduce the amount of paper you're taking in through EDI and other opportunities, and all of those help to reduce your overhead. And maybe just as important, we reduce our error rates and our exception rates in the process. So as we walk through this the next 35 minutes today, our objective is to make you think about how you make the number on the right less for whatever your number is on the left. Now, this is a pretty good graph, too, from Aberdeen Group that, again, is a couple years old, but it still applies. What are the top two pressures driving interest in AP improvement? Now, we call and we talk to customers every day with accounts payable automation. And if you're partially automated or you think you're 80% automated, there's usually an opportunity to still continue improving it. But today we find that the market analysis today says that that still 60 to 70% of companies out there have strong room to improve in this area. But the drivers are lack of visibility into the invoicing and the documents, corporate directories to lower costs, difficulty in finding and managing paper-based documents. I mean, God forbid you have to store everything in file cabinets and paper today, but that is still a reality for a lot of companies. Inability to effectively manage cash according to current business needs, of course. Then there's the risk of payment-related frauds and difficulty in handling, the amounts of supplier inquiries. And we're going to touch on this. We think this is one of the big opportunities today for improvement, is if you can implement different things to cut down the number of times your phone rings for someone asking you when you're going to get paid. We think that's a big metric that you want to try and achieve today. So the challenge varies by industry and varies by company, but where Miria sees the highest value is those companies that have multiple locations, that manage a large number of transactions, documents, and actions across a wide network of employees, global, central, local vendors. Now, if you're a single-point manufacturer, which, by the way, nobody on here today I don't believe is. There's a big, very group. It's a very large group today, by the way. But most of you, I can see, have multiple store locations or restaurants or corporate centers that this applies. But a lot of times these companies also have invoices in multiple formats. They have to manage, as we talked before, energy and utility bills in different formats, multiple contracts and procurement agreements. You have support and compliance documents that you need to match up in the process. And a lot of times there's corporate procedural documents for whatever reason that also have to be matched up in the documents. Sometimes it's union compliance. Sometimes that is material and safety information that's got to be matched up to what you buy. But this creates the challenge that we're really attacking with AP automation. And then, of course, there's some bottom line impacts to making these changes. How do you improve FTE productivity? Now, if you're a multi-location retailer with 500 stores and you have plans to add 100 stores over the next 2 years, I doubt very much that corporate is probably allocating you the same factor of hiring the number of AP people every time they add 10 stores. But that's going to add those number of invoices. The question is, how do you increase FTE productivity so that you can bring on all that additional growth in your organization without having to add a bunch of corporate back-end personnel? There's a reduction of the cost of paper handling and storage. There's the efficiency of forecasting, the overall improvement of document flow and control in the organization. There's vendor relations. Vendors today, they want to be part of the process and they want to know what's going on, and they often negotiate from those terms in terms of what the payment cycles are, and it's important that you have visibility to be able to manage those. And then the last bullet there is pretty important in terms of real-time reporting and metrics. If you're in your organization, how are you doing as an organization in terms of managing the overall process? And getting that data out is relatively important. So we constantly find customers today looking for help as we talk to them about this overall process. So again, before I jump into the next section here, today's presentation is about making you think about the different elements of both the technology that will address some of this, but also the way businesses change in terms of supplier and internal corporate user groups. Now, the basic process can be defined normally. Most people look at it in 3 basic steps. There's a receipt. Did we get our bill in, our invoice in? Did we come in by paper? Did it come by fax? Did it come by email? Is it an EDI transfer? Is it an e-invoice, meaning somebody went into a website and uploaded that invoice, or some other form? The next part of the process is, someone in somewhere has to validate it. You have to code it with the proper accounting codes. You may have to match it to a purchase order or a purchase order and a receipt of goods. It needs to be approved by the proper person in the authority chain. There's often corrections that need to be made. There's often disputes, and there's often exceptions. And obviously you're trying to minimize those first 3, but the process has always been the same as what we see here right now. Then the last step is always pay, write a check, send a wire, ACH, P-card, whatever your method is. But this has been the AP process since we were selling wagon wheels, in the Old West of how you manage this process. But inherently, as we're going to talk about today, we think it's changed. So I mentioned before that we kind of lump it together in 5 separate categories. Now, the first one, the receive category, is still the same. It's still EDI, mail, fax, email, other. But there's huge opportunities in managing that process that we're going to get into detail in a moment. And this is where metrics are pretty important. Then the second part of this is still about processing. How do I route it, validate it, approve it? The third category is a little different when you're talking about automation, but it's about integration. And when I say integration, I'm talking about how do you validate it against existing data and systems and contract information and integrate it into your accounts payable by posting it or integrate it into your system so that you can see payment visibility along with your accounts payable. But there's another level of integration too today, and it's not just data integration, it's also integration of how accounts payable works with different departments, whether it's tax audit department or sales tax management or whatever. All those integrations across people are important too. Now, the fourth category that we look at in terms of best practices and metrics is reporting. What is the analysis that you can get out of the data and information on how you're handling bills? We mentioned before $19 per invoice. Well, how do you quantify that? It's more than just corporate overhead. It's lost discounts. It's realization of discount opportunities. It's compliance to contract terms and how that affects the next negotiation. And then it's overall visibility and analysis of the process itself. And then the fifth category that we're going to talk about here this afternoon goes into supplier services or supplier interaction, if you will. Again, we have pay in that category today too, but there's also communication back and forth with the supplier and how you monitor how they work with you and how you work with them. There's discounting, which we're going to spend quite a bit of time on towards the end of this, and of course reporting again. So as I walk through the next 30 points here in this discussion, I want you to think about each one of these 5 categories because we've broken it down because we believe you have a measurable return on investment in each one of these categories, and that's really the purpose of today's discussion is to hit those high points. So, I mentioned before that there's a lot of stakeholders or the process is complicated in terms of integration across people. So at Miria, when we demonstrate a solution or a system, we like to talk about it in terms of the people involved in the process. So we have something here we call the cast of characters. Now, for our explanation, there's Rachel Brown. She's the Accounts Payable Director. Probably some of you on the call today match up with job responsibilities of Rachel Brown. Then we have Cindy Hayes. Her responsibility is the AP processor. She's the one who in some companies may be typing in invoices. Some companies may be only coding them. She may be routing them for approvals to make sure the managers are handling them. She may be managing exceptions. We've also got John Rogers, if you're a big organization, because you may have the director of accounts payable and 5 different supervisors managing 10 different people. Some of the largest departments we've seen have over 100 people processing invoices in the companies because of the lack of automation. And you may have these players involved in your process. And then when we talk about paper or the ingestion of invoices, if you're not typing the invoices in directly, you may be utilizing scanning technologies such as IBM DataCap to bring in those invoices, extract the data from it. So we have Daniel Simpson, whose job is in the mailroom to either open the mail and route it or is open the mail, scan it, and then validate that indexing. And depending on who you are, some companies have somebody in the role of scanning it, and Cindy Hayes is responsible for indexing as well as processing it. But these roles or these different functions can move around this screen. But 2 stakeholders in this picture here outside of the corporate accounts payable department are pretty important. So in our scenario here, we have Lisa Davis. Lisa Davis is the branch manager for this hypothetical company here. She works out in the field. Let's say that she is a restaurant manager and she manages a restaurant with 100 employees and over $5 million of revenue, and she has to make sure that bills get paid every month, so her suppliers and her vendors and her guy who fixes her air conditioning make sure they come on time, and they're constantly asking her, when am I going to get paid? And she says, call corporate AP. Corporate AP says, well, I don't have the invoice. So some of these processes may be familiar with some of you, but keeping Lisa Davis focused on her job has got to be part of the core responsibility of the corporation. Her job in this scenario is to take care of people that are her employees, her customers, and manage the quality of her food in her restaurant. She's probably not highly concerned about paperwork and keeping track of things. So giving her the systems and the solutions that make it easy and simple for her is important. And my favorite stakeholder in this process is Jerry Maguire. Jerry Maguire is the supplier. He's the guy who calls Cindy Hayes 3 times every week to say, did you get invoice number 5423? We've sent that out here. I need to make sure it's in the payment process. It looks like it's scheduled for payment on the 23rd. Are you going to be able to make payment on the 23rd? When's your check run? Can you verify that that's in your check run? Cindy says, well, it's not been approved yet. I'll have to call Lisa Davis and see where it's at. So these are the scenarios that go on in most organizations today, regardless of your level of automation. Now, you may have 90,000 Jerry Maguires calling you from 90,000 different vendors. You may have 5,000 different suppliers calling you. You may feel like, okay, if Lisa does her job, then I don't have this challenge. But Jerry Maguire's responsibility as a supplier is he needs to know where the money's coming in because he wants to utilize that to pay his bills, and he's got people asking for his money. So it's just an impact or reciprocal effect here, and keeping all these people working together and collaborating is what true AP automation is about. So I'm going to dive into each one of these things for a moment and talk about the best practices and key metrics. Now, you may have looked over the years, if you've been in AP for a while, at automating these processes yourselves. You may have actually put technology in and utilized it and then decided to go away from it because your process changed. You may have put technology in and failed. So one of the things I want to emphasize before I go down to each area in this process, though, is that the world's changed greatly. Technologies that you looked at 5 years ago are a third of the price today. The ability to collaborate with cloud-based technologies and systems that are available from Miria and other systems is greater than it's ever been before. So when we talk about receiving, the key metrics that companies should be looking at is what are your mix of incoming invoice formats? What's your percentage of EDI versus fax versus paper versus e-invoice? On the scenario we laid out front, it said 80% paper, assuming 20% other, because really, let's face it, fax and email are paper when it comes down to it if you've got to type them in. The number of invoices received centrally, the number of invoices received remotely. Now, in our scenario, Lisa often gets invoices that get sent to her restaurant that she has to put into the mail or FedEx, back to corporate office for processing. So a lot of companies today are working on trying to control that. Here at Miria, we have several of our customers today who are now forcing us to go into portals to upload our e-invoices, and that's the only way they want to pay us. And that's certainly an option today depending on who you are. Other metrics are processing times. How many days does it take to process an invoice through the mailroom? How many days to input paper invoices? How many days to process EDI files through your IT group or however that's done in your organization? And the number of days to process other integration fees. We're doing more and more today with our systems with direct integrations to companies like Visa and American Express to sync those up. Then there's the accuracy of the processing. How many errors per invoice count and how much time is spent correcting errors. All of this comes up to how many people you're going to have in your department, or full-time equivalent, which goes to how many invoices they process, and it goes, frankly, right directly to your bottom line and your overall cost. So these are some of the key metrics. Again, it's not meant to be all-inclusive, but these are really somewhere we think is important. Now, the answer by a lot of companies is we're just going to tell everybody they got to go to EDI. So EDI, electronic data interchange, is great because if you can eliminate all paper from the process and get all the data, arguably, you can avoid a lot of these challenges. but there's some good and the bad with EDI. The good, it eliminates all the data entry time and it eliminates conceivably the errors, assuming that the supplier input all the data directly before they transmit to you. 2- and 3-way matching, that process of matching your invoice to your inventory, your purchase order, and your receipts is simplified because you have data matching data. It's a much more efficient. It's very efficient for large, high-volume vendors that give you a lot of invoice, and it's great for PO-based invoices because you can match up all that line item detail. The difficult or the bad, if you will, is that it does change the approval process. If you've got invoices that come in and batch over EDI and you have some reason you want it to get routed for approval, then you may have to look at how you work around that. It's not effective for low-volume vendors. I mean, you're probably not going to set up EDI across, 10,000 different vendors who are sending you 3 and 4 invoices a month. And a lot of the companies with disparate locations, whether it's retail or restaurant chains, it's just not a good answer for all of the local vendors. And it's challenging for non-PO invoices out there because those are usually done more on the authority of the manager, what many of you may call expense invoices. So the answer is, can you get rid of all of the paper out of this process? Yeah, eventually, maybe, if you can go to a higher percentage of EDI and you can push your non-PO and expense invoices to e-invoice, you can start raising those numbers up. But in order to make that happen, you have to put the systems in place in order to make that effective or make it realistic for your clients. Now, when you talk about paper, fax, and email, there are great technologies available today for scanning, much more sophisticated than they were 5 years ago, that can go through an invoice sample like you see on the screen, and we can run this through a system, and we can extract all the header information out, all the line item details out. We can put rules in place that validates that vendor. Is it an approved vendor against your accounting system? We can put rules in place that reroutes it if there's an exception or perhaps an aggressive prepayment discount. We can do a lot of things with the scanning technologies today. Another alternative some of you may have gone to or looked at is offshoring, or they're sending everything to a clearinghouse somewhere where you pay to enter those. When you do that, you may see a great reduced savings in labor costs, but you may also see an increase in the number of errors in our experience because a lot of times there's not a vested interest in accuracy in those things. It's just a big clearinghouse. So in most of our customers today, we're implementing the OCR technologies through technologies such as IBM DataCap that can process literally hundreds of thousands of invoices through a system and with a very high degree of accuracy. And then you have the question of what do you do with the invoice? Scanning at the mailroom is one thing. Constantly we see companies who scan their invoices, extract the data out, then they take the actual paper invoice and they file it in a paper filing cabinet, and that's still their system of record. The best practice option is to take that image of that scanned image and send it into a content management system where you can make it searchable, you can come in and find it, you can categorize it or classify it with what we call indexing so that you can relate each invoice back to the appropriate vendor in the system, and then frankly destroy the source paper. You can destroy the source paper with confidence because the content management system is retaining an exact image of that, a picture of it, if you will, that you can always bring up and see. It's doing more than just keeping the data. But this, OCR data scanning technologies and content management technologies are two key components in the receiving area that we believe are best practices today. So again, we're going to keep moving right on to process, and this is always the fun part of this in terms of managing the overall routing and workflow. Key metrics in the process category are number of days to approve invoices, percent of straight-through process invoices, meaning how many invoices can you bring into your organization and pay those invoices without anybody actually having to look at it or touch it, but you have a very high degree of confidence that payment is being made accurately. The percent that you're going to match, 2-way, meaning you match it to purchase orders, a 3-way, you match it to the purchase order and the receipt of goods. The number of hours to set up a new vendor. If you're constantly in an organization where adding new suppliers is a core part of your strategy and you have to set them up in the system quickly to get them paid, you have to send out W-9s, collect those in, get them entered into the systems. If you have a high number of vendors, you got to look at the number of hours it takes to manage vendor changes of address or payments or terms. And then there's always exceptions identified by an audit trail review. In the overall workflow process, we believe it's really important to make sure that you're implementing an automation system that gives you full traceability or auditability of every step of the process. Who did what and who proved what at what part of the process. So when you talk about workflow, we could spend 2 hours just on that. But when we talk about best practices, the points are pretty simple. Your target should be straight-through processing, minimizing the number of invoices that have to be touched. Your goal is to manage by exception, removing as many touch points as you can so that your AP processor, Cindy Hayes, only has to touch 2%, 5%, maybe 10% of the invoices as opposed to 30 or 40% that may have to be touched today. That requires a workflow process system that's rules-based. It's not where you want to go to your computer programming department and say, write me a program that does X, because X is going to be Y in 3 weeks, and there's going to be 100 variations to that process. So you need a rules-based workflow system that allows a business user to make changes as they're needed as your process is changing. The best-in-class workflow systems offer the rules-based processing I just mentioned. Most of the vendors out there today have pre-built best practices templates that are very industry-specific. So if you're selling automotive parts, then you should be able to go to your vendor and say, hey, what do you have in terms of approval processes that matches our processes today for a high number of PO-based invoices, or a varied number of vendors, or maybe you do a lot through distributors. If you're a restaurant, then your workflow approval processes may be somewhat different, but vendors should have templates already pre-configured for what they've used in other parts or for other customers. You want to consolidate approvals and processing for all cash, meaning best systems today can handle not only PO invoices, non-PO invoices, but they can also handle purchasing card management, perhaps corporate credit cards in some cases if you're utilizing those, and in many cases travel and expense management through the same system has very high value because it's a lot of the same payment processes that may occur. Other companies do that through payroll, so it just depends on your organization. And you want it to integrate with your company's LDAP, meaning if you have 5,000 people involved in this process, you don't want to have to sit down and manage who works for who and who has to approve what at different times. Best-in-class systems today can pull this information from your company's LDAP directory, which is probably maintained by the IT department, and it updates itself, or it's iterative, if you will. And then you have mobile approval integration. The Lisa branch manager out there, she may be in an organization where she's not in the office that much and doesn't have access to a computer. So if you need an invoice approval, you want her to be able to do it on her iPhone or on her Droid or on her iPad quickly. So those are all best practice functionality today that should be available in those kind of workflows. Now, here's a quick picture of a workflow out of our system. When I mentioned before that it should be relatively easy to configure, this has a Visio type effect where you basically change the process of workflow management over by just adjusting a workflow chart. But I brought this one up in this example because it helps you to see the complexity of some of the different processes of approvals that may happen. You may have an approval for an invoice that comes in, and it's okay for the manager to approve it if it's up to 10,000, but over 10,000 it has to go to a director. But then it might be that if it's an IT invoice for the purchase of a computer, it may be over 5,000. That person now it has to go to an IT manager for approval, and then back to another manager to approve. So depending on your corporate overall accountability and how you have that managed, you need a system that allows you to set the workflow rules that are specific to you. So that sums up, our point here this morning or this afternoon on process part of this. We're going to jump right to integration next. And remember, I prefaced this at the start to say that we're talking about integration in two lights: integration to your back-end data systems, but also integration of people across the different organizations. So when I talk about metrics, the data integration, very simple metrics are the number of minutes to input or correct data, the number of minutes to input the same data into multiple systems, and the number of invoices automatically matched. If you can pull out these key metrics in your organization, you can start measuring what your true cost or what your opportunity is for savings. But when you talk about the interdepartment integration, a little bit harder to quantify, but you want to look at what are your separation of roles and what is your duplication of data across organizations. Now, I mentioned before, a couple examples, one of them being tax or sales tax. If you are in an organization that buys a lot of liquor because you're in a restaurant or a retailer and you have particular tax reporting issues that have to be applied for what you buy and accounted for, or if there are special rules on gasoline purchases for convenience stores and those types of things. And a lot of times what happens is all these things come in and they get copied and duplicated so the different departments can manage that. But if you're looking at real automation today, you should be able to bring that same invoice-in piece of information and route it with workflows to two different locations so that two different people can work on the same piece of information and you can avoid duplications. And then there's the sharing back and forth. There may be contract compliance that relates to unions for what you pay in labor rates and you get invoices for in overtime. There's a lot of opportunity in this space to make use of that data and bring it out and integrate it across your decision process today. So when we talk about this, I'm going to come backwards from the people integration a minute and talk about data. In very basic terms, you want to be able to integrate to your purchasing order system so that you can match those invoices up to the purchasing order in detail. There's really not a high need in most companies to approve an invoice if it's matched against a purchase order and the purchase order has already been approved. Inventory management systems on the other side is you may match your purchase order, but the shipment was back ordered, but the vendors could still bill you for the full shipment regardless. Separating those things out by doing three-way matching is important value. And then payment data. A lot of times data for payment may be separated completely from the accounts payable process so that you can send the approval over and you can send it into your accounting system to write a check. The check is paid, we find many organizations who don't have visibility to that part of it. So you want a system that not only helps you manage this overall process, but when the accounting system posts that payment, you need that information sent back to the accounts payable system so that when Jerry McGuire calls in and says, hey, when am I going to get paid, Cindy Hayes can bring up that one record of that person and say, well, you were paid on this date with this check number, and here's the information for that. So, that's part of the integration process to this. The next section, moving right along, is in reporting and analysis. The key metrics here that we look at obviously relate not to many of the others because reporting is a lot about metrics. But, reporting allows us to tell what are the number of exceptions that we're managing in the process. Reporting in today's world can be triggered for fraud detection. There are some very cool analytic tools today that allow us to put in special rules that are going to look at variances in invoicing as they relate to typical scenarios for fraud. You can get extremely sophisticated with content and analytics tools today that help you identify those things. There's still the productivity by person that you can report out, the productivity by team, and, exceptions, of course. So some examples here that we put up in one of our systems here, you'll see a dashboard that shows you scanned invoices by operator, the number of scanned invoices per month, and average time to process. And in a great design system, you can define these metrics however you want. In another case here, we can look at it by vendor to look at invoicing analysis by month, by type, by terms, by payment methods, whether it's check and direct debit. And then obviously when you look at the metrics too, you can look at it by, again, we can parse this information up any way you want in terms of the processing, the invoices by type, completed workflows that goes through the process. And then maybe one of the key things that we're going to talk about here in a minute is that lower left-hand quadrant there that says the average days to process. And you'll see that's broken into processing, the exceptions, approvals, and posting. And those are very important when it comes to taking advantage of what we believe is one of the highest return on investments today is in your supplier interaction, where we're going to next. So when we talked about supplier support services up front, I talked about paying them, obviously. Jerry McGuire wants his money. We can talk about communicating to him, but I want to key in here for a moment on that area of discount. Now, the metrics we think are important to suppliers are percentage of on-time payments, the dollar normal term discount dollar savings, meaning if you got an invoice that says net 30 or, 2% 15, that's what we call normal term discount, where you're going to get a savings by paying that in 15. But then today, many of our customers are taking advantage of what's called dynamic discounting, dollar savings. That's a key metric. And the number of minutes handling vendor inquiries. How many minutes on the phone do you have to spend every day talking to Jerry McGuire? And the last one is lost discounts and penalties for maybe late payments or things depending on your industry. So let's and this is a complicated process today for most of us, because we're no longer, 3 guys or 30 vendors around the local guy. A lot of things are global today. And whether you're a global organization that you're dealing globally and buying globally, or you're a U.S. organization focused and buying globally, or you're regional, you have to think outside the box. So you may have to worry about multiple languages of different people coming into your system. You need the receipt technologies that can perhaps read an invoice in French or Italian, or maybe do translations of the funding, whether it comes in pounds, conversion to dollars, or conversions of dollars to francs, or whatever it is. When you're looking at the overall process, there are AP solutions today that can handle both the multiple language and the multiple currency factors. But what I want to really get to here today is one area that really excites me is discounting. Dynamic discounting, in definition, allows additional savings by paying suppliers sooner than existing contract terms. Buyers can push the offer to the supplier. Suppliers can contact the buyer and request payment. The objective is to meet the cash requirements of suppliers in exchange for additional savings. Now, this is different than the net 30, 2% 15 term that's on an invoice. This is a situation where we can take an invoice in. It's supposed to be paid on the 28th. You get it through approval on the 20th, and now you've got a window between the 20th and the 28th to pay that. And it just so happens the supplier needs his cash on the 25th because he's going to make payroll on the 26th. So if you can close that gap with communications, best-class companies today are realizing multi-million-dollar savings through dynamic discounting. So when you look at this, we often call this supplier financing. And in this situation here, I'm going to walk through this a minute. The invoice really has to be processed fast enough to create what we call an opportunity gap between the approved to pay date and the invoice due date. If you're taking 28 days to get invoices through the approval process and the payment date is on the 30th date, you don't really have a big opportunity gap to take advantage of any dynamic discounting between you and your supplier there. So automating the overall process is fundamentally key in order to be able to offer this. And then further, if you want to do this with your supplier, you have to provide them a platform for them to be able to see what the opportunity gap is. It really doesn't work for Jerry McGuire to call Cindy Hayes every day saying, is it approved yet, because I need it earlier, and can you walk down the hall to the controller to see if he can pay it earlier so that I can know whether I can get that cash or not. You have to provide the technology today through a supplier portal for them to go in and be able to facilitate this back and forth to make sure that both sides, include the supplier and the buyer, can get their value out of this. The buyer has to be able to react quickly to the request, and the buyer, of course, has to have the cash to meet the request. In the end, everyone wins. Everyone wins because supplier gets their funding, and the buyer wins because they get reduced purchasing costs. If there's a loser in this whole thing, frankly, though, it's the supplier's bank, because now instead of going and borrowing money against an invoice, that supplier may be able to give you the 1 or 2% discount that you've got to get that money 5 days earlier, and they get it works for both the supplier and the buyer. So when you talk about the portal, this platform to be able to facilitate this, there's a best practices around that as well. It really needs to be a supplier portal through a secure web platform. Best in class can offer a platform that they go sign into that's unique only to them, or it may be integrated functionality that's put into an existing portal that you have with your suppliers for where they place orders. It has to integrate data from your AP systems because you're providing minimum functionality to the vendor. You want the supplier, Jerry McGuire, to sign on. You want him to be able to check invoice status online. You want him to be able to upload an invoice so that you can avoid this whole paper or fax email process. And you want him to be able to request dynamic discounting back and forth. And if you can take those three functionings plus the ability to maybe securely message back and forth to facilitate this, these are very basic functions that can add up to a lot of savings through the implementation of a supplier portal. And there are actually companies out there today that are trying to trying to sign up customers to only utilize their web-based platforms for supplier portal, which is great, but in order to make this work, remember you have to identify that opportunity gap, meaning you have to get your invoices through the process fast enough in order to have a gap between when it's approved to pay and when the supplier's normal payment date is to take advantage of it. So we're coming to the end now. We're at about 45 minutes into the presentation, and I appreciate everybody's time today. The summary of what we've been discussing here is about accounts payable and how you can achieve the very high ROI available by automating it. We didn't talk a lot about today or almost any about technologies, but I mentioned earlier that if you looked at these systems, 5 years ago and worked with your IT group, you may have tabled this solution. You really need to take a look at it today because cloud-based solutions, both for the receipt and scanning and the content management and for the workflow processing and all comprehensive systems like the Miria Active Finance system can be brought to you through cloud subscription-based today with very little IT involvement. Integration to your core accounting systems is easier than ever with the current technologies of how we move data back and forth. Reporting and auditability and traceability is very important today with fraud and for regulatory compliance. And the last bullet here goes to the discussion we just had about supplier portal. Supplier portal technologies can save many companies literally millions of dollars and reduce the overall supplier inquiries exponentially. So we used to say that our highest return on investment was in the scanning and receipt and reducing paper. That is still very high, but some organizations today are justifying movement with this through the supplier portal and taking advantage of dynamic discounting. Depending on your buying habits and your vendor community, you may be able to fund this project, your project of AP automation, many times over. So this is the 5 categories in summary that we talked about today of receipt, process, integrate, report, and your supplier servicing. The quick commercial sticking in here of Active Finance is Miria's product. If you're interested in finding out more information about it, please visit our website at www.miriasystems.com. Our product for AP automation is called Active Pay. We also have Active Expense for travel and expense management, as well as other ancillary products that support the overall process. The next Miria webinar in this series of customer of education is called Active eRoom, the digital mail room. It's going to get into not only the ingestion of invoices and those types of things that come through the mail room, but how we have helped other customers to be able to take and digitize every piece of paper that comes through their mail room, classify it using electronic technologies, and greatly reduce the overall efficiency of the organization. That's on June 25th at 2 o'clock in the afternoon.